As a starting investor, you studied diligently for days, reading books, watching YouTube channels that talk about investing. Then your knowledge increased, which in turn, you made your own checklist for when you are buying stocks. As more days, months, and years had gone by, you then learn how to calculate the intrinsic value of a stock. You evolved so much and you say to yourself, I'm now good at knowing what stocks to buy. But a time came when you realize, wait, I'm now good at picking and when to buy a stock. But when should I sell it? Ooh, now that's another big question for us investors, and we will answer that question today. Now, when to sell a stock? So before we go on to that, you should first click the like button, and if you haven't subscribed yet, do so right now. This really helps for the YouTube algorithm and in turn lets my channel to reach more investors and potential investors out there. This also gives you that sense of joy that you help out in a program to spread a good cause. Going back, when to sell. This is probably the most left behind part of investors. They usually have some form of entry but don't have a plan of exit. Well, this might confuse you, but usually before you buy a stock, you should have a plan of when you are going to sell it. Though in my investing strategy, my plan is to hold my stocks forever, gaining both capital and dividends throughout the years. That's why I really dig deep before buying a stock. I do research how well the company is doing financially. I compute for its intrinsic value, anything I can do to evaluate if that business would be a great stock to hold on for a long time. But technically, business do sometimes change and in turn goes from good to worse. With that said, this brings us to our first reason as to when you should sell a stock. First is when the company's ideals and fundamentals change. Wait, there's still a catch here. You don't just sell when the financials of the company change. Of course, just like when you did research when you first bought the stock, you should also do research first as to why their financials change. Companies also has cycles in it. Sometimes a certain event dragged their income down. For example, this COVID pandemic, a lot of business were put to a halt because of the restrictions put upon them by the pandemic, in which led for the company's financials to go down. Right now, most of my computation for the intrinsic value has also gone down because of the cut in earnings of the company. These kinds of things happen. So do research first what happened. If it's just a short-term event and you think the company will return back to normal after that event is taken care of, then you might change your idea to not sell it. That's why in my stock analysis videos, I mentioned there, never evaluate a company by just looking at 1 to 3 years of their financial statements. You have to have a wider look. The best to look at is 10 years financials. This gives you an idea how well the company is doing because companies sometimes have sudden bursts of earnings in a single year leading to their next year's a decrease in growth. But if you look at other years, that decrease in growth is still in line with the overall growth of the company. It's just that the previous year was really a good year for them. So with this, if you just look at 1 year, you might say to yourself, oh, their financials decrease. I need to sell this. That's why you have to research first what happened. Don't just sell based on a single year. Likewise, if you see that company has really taken a massive hit and you are certain that they won't be able to get through this, then that's when you might think of selling it. Again, if you are really certain. Another one I mentioned when the ideals of the company change. What do I mean by this? For example, you invested in that company because you believe that their business is about helping the environment or some form of innovation you want to support, but then the company suddenly takes on another direction. You see their business is now the exact opposite of what you believe they would do. This is what I mean of the change in ideals. If the ideals of the company don't suit your investing ideals, like what I mentioned in one of my videos, the stock market is like voting. You get to choose whom you want to support. With the company's ideals changing, this is also for me another reason why I would sell a stock. I don't want to hold a stock wherein I hate their business operations. It gives me a heavy feeling that I'm supporting a wrong cause. Second reason of selling is when the company you invest in has already reached far beyond your intrinsic value computation. This is in the thought that you think the company is really overvalued, that their growth won't be able to catch up to their current price, because there is always a catch. Though yes, it has reached your intrinsic value computation, but what if the company did great in the succeeding years? Then it has a new intrinsic value because of the growth it has taken. So before you sell for this reason, you really got to assess if the company is really overvalued or you think their financials is really far off from its price. that the earnings would take dozens of years for it to catch up to its price. Or maybe that stock got hyped up so much you are really sure that it's way overvalued. Complicated, isn't it? Buying, yes, is complicated, but selling is also the same. Third reason, which is connected with our second reason, is when you find a much better investment. Now, I told you it is connected because when you think the company is now overvalued and you found another great opportunity, of course, you can take profits from that investment and transfer it. But again, another catch. What if the company you sold suddenly took off higher? Well, for me, it isn't a loss on your part since you still gain something off of it because you got to invest in another great company and you already cash in those profits. Also, what you could do is just sell half of it. So if your assumption of the company you're selling is wrong, then you still get to ride it when the price go higher. You really have to research the company when selling, remember, in order for you to avoid such things. Although missing out on some stocks are a normal thing in the stock market, there's always another opportunity out there. Now that's it for the reason of selling a stock. I just want to add something because I see a lot of investors do this. When not to sell a stock. First reason is when the stock price go down. I see a lot do this. They sell a stock because they incur some losses. They want to cut down some loss to prevent further loss to accumulate. Well, I don't get this part. It just proves that you don't know what you're holding. You don't know the company's fundamentals and financials. Because are you certain that the price fluctuation is something related to the financials and fundamentals of the company? Now, occurring losses in the stock market after you've bought the stock is a normal thing to happen. Remember, it's not just a stock you are holding. It is a company. Usually, stock fluctuation doesn't even have any connection to the company at all. Can you just imagine? Does the value of the company change that quickly? No, they don't. That's why value your stocks as companies, not just some mere stocks that you only look at price alone. Usually, people who sold their stocks so early often experience missing out. But when the stock price go higher, they go in again buying the stock at a very high price. Then when they realize they bought the stock at the wrong price, since it's now going down because a lot of people started taking profits, they sell their shares. This go on, repeating the cycle again and again. Some investors even bought a stock at a great price, but since the price is still going down or is stagnant, they can't wait any longer and feel that the stock they hold is wrong, so they sell it. This go on again, repeating the same cycle because they didn't evaluate the company. They don't know its health. They don't feel that security that you're holding a great company that would last for a long time because they just look at price alone. Remember, don't get too emotional when you see red on your portfolio. Sometimes it's even a buying opportunity for you. You get to buy more stocks of a great company. People who often panic when the price of the stock they hold goes negative didn't research well the company they are holding. They just went on full speculation because a certain YouTuber or guru said this stock is a must buy. Don't fall into the trap. Don't become like these investors. That's why again and again, I remind you guys, do your own research before you buy a company and do your own research when you are going to sell it. Chances are you may be selling a wonderful company. That's why for me, I don't care if the stock price don't move after I bought it for months or even years because I'm not holding it for just 1 or 2 years. I want to hold that for more than 10 years. Companies usually takes time to mature. And even while I'm holding it, though the price doesn't move, I still get paid because of their dividends, and that dividends is circulated back to my portfolio, letting compounding do its job. You know, when I evaluate a stock, I turn off all the noise. What are these noise? These are comments in YouTube or other stock analysis videos or what the analysts say. I want my decision to buy a company based on my own research and understanding of it, not someone else's opinion or ideas. And after I evaluated it, I don't even watch other valuation for it because I already have that feeling of security and understanding of the company. I just read recent news of what's going on in the company after. Now I said this because you can relate this to selling a stock. Don't let other opinions rule over yours. Take out the noise. You know the great investor Warren Buffett doesn't even reside near Wall Street. He hates it there because he wants to get rid of the noises of Wall Street. Do the same. Stand up to your own research and beliefs. Take out the noise. Now that's it for this video. I hope you guys got a lot of info from this. If you haven't yet liked the video, do click that like button now. And also, if you haven't subscribed yet, do so right now so you get to be notified when I post future videos about finance and investing. Again, do your own research when buying and selling a stock. Remove the noise. Happy investing and see you in my next videos.